Welcome to another edition of Inside the Economy. I'm Larry Howes. Thanks for joining me. Got a lot of things to talk about. There's a lot going on. Specifically, we're going to talk about inflation in light of what's going on in the Middle East right now. Another regime change. It's going to have an impact on our inflation and a number of other things that we're going to talk about in the investment environment. Not the least of which is housing affordability, which is becoming something of a political football when it really isn't, and hydrocarbons in all its forms, which we're going to adjust, and who's going to benefit and who may or may not benefit from all of that. Quick look at the numbers. Fourth quarter estimate of GDP is down. It was already down to begin with at 1.4, now it's down to 0.7. Well, remember, government was shut down for half that quarter and had an impact on a lot of other areas. The first quarter of 26 is going to be a lot better. I'm guessing maybe mid-threes. Anyway, it's not recession, none of that. It's just a bad quarter when things were shut down. Unemployment is still 4.4. Initial jobless claims aren't bad. This latest CPI, inflation reports, inflation is firming up. The deflation cycle is probably over. We'll get to that in a minute. Interest rates are back up for a variety of reasons, and mortgages back in the sixes, really where they belong. That's West Texas Intermediate oil at $95, $98 a barrel. This is Monday, so Friday was 101. It's going to come down, and we'll also talk about that a little bit. Spending in February, business spending, individual spending, without using credit cards was very good. Profitability on the small business side was good. Wage and hour wage increases, inflationary wage increases, and voluntary wage increases were good. January and February are pretty good months. There isn't anything holding that kind of activity back. All the inflation measures, CPI, Producer Price Index, wage and hour, the light green. We've had a deflationary cycle going here the last couple of years. That is probably over, certainly through the summer. Lowering inflation is not over. We're not going to start into a high inflation environment. It's nothing like that. But the chances of a rate increase, not good. Rate decrease, no way. Certainly through the summer, maybe to the end of the year. Inflation is going to firm up. It's going to stay where it is. It's starting with gasoline, which is up a gallon. It's going to be up a little more a gallon here for a while. Price of oil, well, that's great news for Texas. It's free money to them. Brent crude, $1.10 a barrel. They can't get oil through the Straits of Hormuz. It's good news for Texas and all oil-producing states, Canada. The key here, which we'll get in more detail later, is Venezuela. That was another regime change, and they're getting them back online in the oil business. Chevron and Shell have written lots of production contracts in Venezuela, changing the old socialist ways, getting them back into what they were in the 70s, the richest country in South America, because they were selling all their stuff to the United States and a few other places around the world, but predominantly the United States. It's nice to get dollars. More on that in a minute. Affordability is going to be part of this election term. It's probably going to bounce around a lot because homeownership is very expensive. We are in an environment where this is price to income ratio, and prices are very high. They are not going to come down. We're still basing everything on it costs $200 a foot to build a house. That's why we're doing multifamily, and a lot of builders that just do single-family homes are going smaller. Well, they have to. Cost too much money. The existing homes, that will be for people that can easily afford that stuff, and that's probably not going to change. The average annual mortgage payment as a share of income is very high. If you look back where it was from about 2008 to 2021, it was cheap. It was easy. That was the fat, dumb, and happy days. We're back to where it probably ought to be, up at 42% of your income. And that is part of the affordability that is not coming down. It's not going to be reduced by a major change in what the inflation numbers look like, or some, let's lower the interest rates, everything will be more affordable. No, we're not there at all. We're adjusting to the costs. We're adjusting to a number of costs, not the least of which is homeowners. You look at a typical upper middle class home in Denver, well, they're pushing $3,500 a year for just basic homeowners insurance. That's not coming down. That's not just fires and floods in California, that's everywhere. That's fires, that's cost of repair, the difficulty of repair, so on and so forth. That's not coming down. And the unspoken one here, which I've mentioned before, which is going to start probably in 2027, is the need for local and state governments. They need more money. They need another 20-25% worth of income. It's not just bad decision making and bad spending. There's always some of that. They literally need more income, just like the federal government does. That'll be our next big thing. Affordability is not going to change. It is going to stay up there, and the people that can't afford it, that either have the assets or the wages to afford it, well, they're not going to change much. They're going to buy what they want. If you're trying to get into that market, you're going to be in multifamily housing for a while, almost certainly. The stock market, well, it didn't react real well to the activities in the Mideast, even though every other stock market on earth dropped significantly further than the S&P 500 did. In fact, it was up today. That is going to be not likely a big correction. We've probably seen the bulk of it so far. It's probably going to stabilize back down to what it's been trying to do. This is the last year's performance. What it's been trying to do is get back to where earnings are, and we're kind of there now. It had to take some event to bring it back down, but that's where we are. The rest of the world is investing here because the rest of the stock markets are much more sensitive to this stuff than the U.S. is. That's actually pretty good news for your investment environment. The other side of the coin is hydrocarbons. Here are the four of the biggest economies on earth, China, India, European Union, and Japan, and they all need to import oil. The United States is now cheerfully back where it used to be back in the 70s and the 80s, an oil exporter. Everybody else, they have to import it. The question is whether you want to deal with the Mideast or not. We chose to for decades, probably for whatever good reason is. The Monroe Doctrine will tell you that the Western Hemisphere, we can pretty much take care of ourselves, among other things. And that's pretty much a theme of this administration. Started with Greenland. Now it's going to emphasize Venezuela. There's lots of oil in Venezuela, and they used to be great producers, and they're going to be big producers again. The trend is already there. Regime change a few laws, get a few contracts. They're already shipping their crude to the refineries in Mississippi and Louisiana, like they used to. They are soon going to get back in the natural gas business, the oil business, and the rare earths business, of which they have lots. You just have to change the political climate. As a reminder, this is basically the per capita electricity, how it's generated, how it's been generated over the years, clear trend. Little more than half of this comes from hydrocarbons. The thickest part there in the middle, the gray, that's coal. If you haven't been in China, spent a few weeks in China, living in coal smoke, you really don't know how nasty that is. But that's the bulk of the world. The little red down there, that's actual oil, fuel oil. Down the bottom, natural gas, hydrocarbons. It's inconceivable that the global economy can wean itself from hydrocarbons for decades. Don't make any bets thinking that's going to move faster. It's simply not. It's going to be a question of You're going to deal with, well, Russia will be back in the oil market probably by the end of the year. But you want to deal with the tensions in the Middle East? Some people are going to have to. I don't think the United States is going to have to. I think we're going to fix the issue in Venezuela and deal with them and our own reserves. Well, basically all good. The other side of the coin here, which is going to have much more subtle impact on things, and those of you that don't know what urea is, well, it's the primary ingredient in fertilizer. Urea, you take natural gas, you cook it into ammonia, and then you blast it with carbon dioxide, and the product of that is urea, and it is majority active ingredient in fertilizer and a lot of other things, hand cream, all kinds of things. Well, the price has gone up here recently, but historically and recently, a lot of that stuff has come from Saudi Arabia, Qatar, Oman, the Middle East, because it's a nasty process. Europe used to do it. They don't do it anymore because they don't have any of their own gas anymore. The other big producer that isn't mentioned here, Venezuela, they were very much in the natural gas and the urea and the fertilizer business. That was one of the things that Maduro sort of took apart because it's technically requires competence and upkeep and a lot of other things, and they weren't willing to do that. So there's a safe bet that they are also going to be back in the natural gas and the fertilizer business by the end of the year, which will help the farmers. Right now, what I think is going to happen, fruit production is going to be down because the delivery of fertilizer is down. It costs more, and there's not quite as much of it out there. The U.S. farmers have been very active in the last week selling everything that they've had from bumper crops the last couple of years, the corn, the soybeans. They're selling it because the rest of the world needs it. China, Indonesia, Turkey, Egypt, they're selling it. Well, I think most of them are already anticipating that their yields are going to be down this summer and by the fall. And they're pretty okay with that because the prices are going to be up. Bumper crop yields look good in the books, not so good in the bank. I think they're going to change that. I'm suspecting that your basic U.S. farmer is going to do all right because it's just going to be part of the inflation here. It's not a question of access or a question of actual affordability. It's simply these root grains and everything are simply going to cost more. Fertilizer issue. I don't think that's going to be a long-term problem. Again, Venezuela. Finally, interesting question on, is the American auto industry falling apart? Has that been taken over by the rest of the world? By no stretch of the imagination. The rest of the world's automobile industries, most of them aren't doing well at all. Volkswagen is not teetering. They're past suffering. They're almost teetering. They're not doing well at all. None of the German companies on any scale are doing well at all. The China automobile industry, well, they sell their stuff cheap and they don't last long. They have their own problems. In the U.S., they're again the market with the money. It's still Ford, the F-150. Tesla is still very popular in California, Nevada, and Washington. Some Chevys, GM has been losing ground. Ford's been building it up. Honda's still doing real well. And Toyota trucks. All built here. So the U.S. auto industry is doing great. They're just fine. Okay. I don't know how the regime change in the Middle East is going to play out. I don't suspect it'll be a long, drawn-out affair. One way or another, they'll draw it to a close and get back to some realm of normalcy because the rest of the world needs the oil. On the big things, little things side, the Monroe Doctrine is going to start to take more and more impact and provide more and more benefits to the Western Hemisphere. We're getting closer to home. And it's all going to be based on bringing Venezuela back online in a lot of areas. Okay. As always, send questions along to info@SHJ Wealth Advisors. I'm happy to deal with it. And I will see you next time.